So thank you for the opportunity to be able to talk and present to you today. I'm delighted to be here. You should now see my slides change, giving you a little bit of background about myself. I love working with the not-for-profit sector. I've been working with accounting systems, but not just the software side of it, but helping the not-for-profit sector and of various sizes increase their productivity by working with the systems that they have and implementing other ones to help save them some time and get this financial reporting out that they need. So over the past 20 years I've worked with a number of accounting systems and accredited in them all to make sure I keep up to date so that I can give you the best information and most current information as possible. But enough of me, let's jump into our agenda today and let's see what we're going to cover in our short session that we have of time together. We're going to warm up our session by just reminding ourselves who reads those reports, our board members, and then look at laying some good foundations so that we can get out some great reports. We'll touch briefly on the implications of poor reporting and then we'll launch into the key components of good financial reporting. We'll also look at how to produce the key reports for your board and finish up our session with a presentation of easy, cost-effective budgeting and cash flow tools that can really save you some time, increase your productivity and automate your processes. So let's jump in. Let's jump in and talk about, first of all, who actually reads our reports that we produce. Because whilst it is our board members who are our key stakeholders of reading our reports, it's not just us internally, and we need to remind ourselves, I think, that each of the board members that are sitting on our board all have potentially different backgrounds that they're coming from. So they're quite varied and they'll have different levels of expertise and they often have different financial knowledge from potentially none through to qualified, senior and very experienced accountants. So we have to keep in mind who actually is looking at these reports that we're presenting. But we also need to think about the reports in the sense of that we will need to look at them internally. Some of the managers may access these reports as well as the finance and other staff. And the same reports potentially could be used by funding bodies, the different regulatory bodies, and when we're doing grant acquittals and those different compliance groups such as our auditor and keeping that dear old tax office happy as well. So there could potentially be a whole range of people, maybe 5 different or more groups that are interested in how we present our information. Do you have this challenge of keeping up to date with numerous groups of people's requirements of presenting your financial reports? You could potentially have 5 different groups that you all need to report to who all want your information in a slightly different way. So let's lay some good foundations to help us in order to produce our reports for these different groups and see how we can potentially cater for these different groups. So laying good foundations. I always suggest that the foundations of great reports are the structure of our accounts. That's that list of accounts where we allocate our transactions to income, expenses, or potentially assets or debts that we have. And we want to ensure that those accounts, no matter what accounting system or what process we use, reflect the way the organisation operates. We want it to be a tidy list, not too long. We don't want it to be unmanageable. I have the philosophy of the KISS principle, keep it simple, because the more detail you have in the structure of accounts, the more it requires resources of processing and managing that account structure. We don't want it to be unmanageable, we want it to work for us. And of course we want those titles of those accounts to be clearly labelled as well. You may also need to consider the national standard chart of accounts. So whilst our accounting system, if we're using one, or our groups of income and expenses that we've defined, whilst that we may have a defined list, we also need to take note of the National Standard Chart of Accounts, or NSCOA, that was originally developed in Queensland by QUT that's now been moved across to the Australian Charities and Not-for-Profit Commission. And it's a tool designed primarily for small to medium not-for-profits that typically don't have an accounting department or accounting system, as some guidelines as to a structure of accounts. Now, the NSCOA, the National Standard Chart of Accounts, is optional, but it does suggest on their website that larger not-for-profits have adopted the data dictionary component of the Standard Chart of Accounts so that they can align their systems to comply with more consistent reporting across your sector, particularly when reporting on funding. And some states are really starting to require this structure of accounts, and they're implementing that periodically in relation to funding. Another aspect of good foundations is keeping our information up to date and having accurate information. Now, that's fairly obvious, of course, but I must say that I do see reports produced that are not necessarily reflecting the true financial position of an organisation. And it's important to remember that it's the actual data entry and the processing which accesses this and uses this chart of accounts that forms the basis of the financial reports. So as I say, garbage in, garbage out. So for reports to reflect a true financial position, we need them to be up to date, of course, and accurate in order to make those informed decisions or those stakeholders to be able to rely on. So that leads us to discuss best practice in bookkeeping. So in order for our information to be up to date, do you have some processes in place in your organisation? Do you have some routines that you follow, or are you formally organised with policies and procedures? Bank reconciliations should always be kept up to date before reporting is carried out. And not just the general day-to-day bank reconciliation, but those that may only be utilised with interest received periodically. So maintaining all of those reconciliations will keep your information most up to date. Payables and receivables. Is somebody having a look at what's on your outstanding receivables and payables reports to make sure that what is showing there should actually be there and there's no duplication or disputed accounts or errors on those lists? Inventory may or may not be relevant for you, but if you're keeping merchandise, you're selling products maybe at fundraising events, then inventory or doing regular stock takes is going to be important for you as well, because that can have a direct influence on the value in your financial reports. So it's not just about doing a stock take of those merchandise items, but it's reflecting that back on an accounting system if you use it. Also, use of correct accounting procedures in relation to prepayments and accruals. So prepayments might be expenses that you've laid out for, say, insurances, for example, that relate to costs across a full financial year, but may be paid in one lump, so may distort one particular reporting period. So correct treatment of those prepayments, of course, is important before you produce your reports. So to our accruals, along the same lines of capturing accruing of costs that may not automatically be recorded in your system. And by accruals I mean items such as provisions for leave that is not yet paid to staff. Not all accounting systems will automatically record unpaid leave as a financial aspect in your financial reports, and it may require you to enter, or somebody to enter, those transactions in order to give you that true financial position of the organisation. Can you imagine if somebody's owed lots of long service leave and you have numerous staff who've been with you for a long time and those costs are not captured as part of debts that the organisation has coming up? Correct treatment of unexpended program or grant costs as well along the same lines. Of course, you potentially could receive your income, but those costs are not yet spent out. Again, they need to be apportioned across the relevant periods of time. And another good practice to follow in bookkeeping is for someone to be reviewing those regular clearing accounts. And by clearing accounts, I mean accounts that are captured such as GST collected accounts, payroll clearing accounts, items that are accounts that have transactions that are put into them on a regular basis that should be used to clear out when those payments are made. So by clearing out and reconciling those balances will ensure those, again, the financial reports are most up to date. So these are all good aspects to consider as part of laying good foundations. And you may well have a checklist in your organisation to ensure that your processes are consistent, that you follow. Particularly if you've got a number of staff working on producing the reports, a number of people who are helping with the data entry, or maybe you make use of volunteers in your organisation to assist with the processing and capturing of this information. I always believe checklists are a great way of ensuring consistency no matter who is working on the processing right through to who's producing the financial reports. Because if we don't, we can imagine what the implications are. Pretty frustrating, isn't it, if we don't have good reports? Very frustrating in order to try and make decisions if the information is lacking. Or worse still, if our decisions are being based on wrong information. Or worse still, if we don't have information. I don't know which is worse, wrong information or no information. And of course, having our information reflected using true accounting standards by correct allocation to our different accounts. But also consider too whether you're duplicating your work in trying to cater for all these different stakeholders. We talked about those potentially 5 or more groups that we need to get the reports out for. Are we duplicating our time and the work that we're doing? In fact, are we wasting time with rekeying of data? This is where it's important to think back of having a consistent chart of accounts or accounts group or listing in order to cater for those multiple groups that are interested in our information. I believe that it is important to give those who support the organisation the tools and the knowledge to produce the information quickly and easily. Many of us don't have time to waste, particularly if we're relying on volunteers to assist us with the reporting, and we certainly don't want to produce wrong information, particularly in relation to funding and reporting to funding bodies. So what are your challenges? Sakina, I believe we have a poll that we can put up to see what people's challenges are.
Yes, we do.
So if we can run the first poll, tell me what your biggest challenges are in financial reporting. Is it that it's time consuming? Is it that it's having to understand the concepts? Or what is your issues with knowing how to use the product that you're using, the software? Or is it lack of training? Maybe you're not even using a computerized accounting system and you're trying to do it all manually. Let me know what your challenges are in your financial reporting. We'll just give everyone a moment to indicate what their challenges are.
So we have about 62% so far.
Okay, what are your challenges in reporting? Do you have lots of reporting to funding bodies?
We have about 80% voted right now. We'll just give about 15 more seconds.
Great, and Zakina, you'll share us with the poll and turn the poll off for us, will you?
Yes, I will, yeah.
Great. So do we have anything standing out, do you think, in the poll?
Currently we have about 58% who save time-consuming, double-handling information.
Yeah. Yeah, and that's certainly what we see working with clients face-to-face or online, is that there is a lot of double handling going on, and it does seem to take a bit of time because of the formats that people are trying to produce their information in.
So here we have the results. About 58% still go ahead with the time-consuming double handling information. About 40% go for understanding concepts, that is budgets and cash flows. And
Okay.
the same 40% go for soft knowledge or lack of training.
Okay.
And about 5% for our system is not up to date or reliable. And there are no preference, as in nobody's marked for not using a computerized system.
Okay, so everyone's computerised. That's good to hear. So that will certainly save on some time-consuming aspect. That's great. Thank you for that. That's good to see that. I guess it's reassuring to know that you're not alone, that many people are double handling their work, and that's something that we're here to talk to you and show you some solutions for you today. Okay, so moving on to key components of good financial reporting. According to CPA Australia, the one of the accounting bodies, back in May last year, their definition of good financial management is that financial information provided in the financial statements and budgets and forecasts should be able to be used to improve operational activities and accomplish important daily and future financial objectives. The financial management of the not-for-profit includes obtaining funds for the operations of the organisation and ensuring their effective use in line with overall objectives. So ultimately, good financial management means that the organisation will use quality, up-to-date and accurate financial information to undertake their detailed review of operations in line with financial information provided. Ultimately, it should be able to be used and reliable and relied on to help make good informed decisions. So, the components of good financial reporting, a summary of what we just indicated: concise, accurate, up-to-date, well presented, easy to read, and as you all indicated, timely, maintained on a regular basis. By segmented, I mean in here maybe divisional reporting, and again not having to rehash and double handle our work. As I mentioned earlier, I believe the KISS principle applies. We should keep it simple, but it should also be easy to be collated and not take a day to produce our financial reports. It's that cost-benefit analysis, isn't it? We don't want to be spending hours and hours just to get out one simple report that somebody can rely on and present to our boards. So let's move on to talk about those key reports for our board. How do we present them? What is the format that we use? Do we produce a detailed number of reports? Do we overwhelm them with too much information sometimes? Let's think of our audience. What is your board's background that we mentioned earlier on? Many don't have financial backgrounds and they'd like to have better concise information. Maybe a 1 or 2 page summary supporting some more detail on the reports would give them better key information than overwhelming them with too much. But consider too how the information is laid out as well. Did you know that there's been university studies carried out in relation to eye tracking when reading financial reports? And it's shown that when there's lots of information presented, that the reader jumps around everywhere and doesn't focus on any key areas. In fact, their eyes are all over the place. Microsoft has also done studies showing where people look on the screen, if it's visually on the monitor. And usually the eye tracking for their research found, again, it's up the top, usually up the top left. Hence why the Microsoft Office products have nearly all their options across a top ribbon bar across the top. So what do you have across the top of your reports? How many reports to produce? Maybe it is better to produce a 1-page summary, not too much information. We know that everyone's short on time. More is not always better, and sometimes too many reports can be overwhelming. But what specifically are the key reports you produce for your organisation? The income and expenditure statement is potentially the first one that people tend to focus on. And whilst profitability is not the core purpose of a not-for-profit, it's certainly necessary to ensure that the not-for-profit is sustainable as well as being properly capitalised and properly funded. Important too is the need to ensure you have adequate cash flow to support your operations during its life in order to be able to contribute and achieve your goals. So it's not just the income and expenditure statement that we're looking at, it's also in conjunction with our balance sheet report. And the balance sheet report is often forgotten or misunderstood. And when we run our face-to-face training sessions on bookkeeping concepts, we find that the balance sheet is probably one of the least run reports by many people, mostly due to lack of understanding. And the balance sheet is really a snapshot of the position of the organisation at any one date in time. It includes all the assets, so your equipment, any bank account balances, all the things of a positive nature, your assets. It also includes your debts or commitments, referred to as liabilities. And those debts and commitments are taken off those assets to show an organisation what its net worth is. In other words, your surplus. And the detail of that surplus is actually detailed in your income and expenditure statement for that period of time. So the two reports should actually be looked at together, and it might be worth doing at some stage if you're not so savvy in the financial reporting. For those who were talking about understanding concepts as being a challenge, have a look next time at your balance sheet and income and expenditure statement side by side, and you'll see that they are actually connected, so important to run both. Budget reports. Your budget reports, which is what your projections have been comparing to what actually transpired, as well as projections into the future, so that you can see what your potential sustainability is of that organisation. Also, your cash flow. How is the cash going to flow over the next 12 to 18, 24 months? What is the projection of what your capability is for money coming in and money going out in certain periods of time? Also, the individual divisional reporting or program reporting to see how each of the individual programs are running. Some may be working successfully, some may be not. So of course you want to look at each of them to see the highs and lows on each of how those programs are being managed. So that's all very well to talk about what we have to do, but how are we going to go through that process? What tools are you currently using to bring out these financial reports? So the ones on the screen I've shown you, tell me, what tools are you currently using? Can we run another poll, just so I've got an idea, Sakina, of our second poll? What tools are you using and what methods of bookkeeping are you running to produce your financial reports? Are you using manual systems? I think most people indicated they were computerised. Are you using commonly used accounting systems such as MYOB or Reckon? Or are you using other products that maybe you've inherited that are not so commonly known? What tools are you currently using to help you with your financial reporting?
So we can see so far of the 78% that have voted, 82% use MYOB.
Okay, excellent. So the majority of users on today are actually already using MYOB as their accounting solution. Excellent. Have we finished our poll? Have we got most people in now?
Yes. So about 8% use manual or Excel, 79% MYOB, 5% QuickBooks, I reckon, 3% Zero, and 5% other or not sure.
Okay. Excellent. So I know that I'm talking mostly to MYOB users today, so you'll be interested in our next part of our presentation. So thank you for that poll. I'll just take back the screen and we'll move into our presentation now for the next part of today's session. So this next segment is where we're going to jump into the software. We're going to look at MYOB and we're going to look at Calxa. And I think these two products are two handy tools that work particularly well together to produce great board reports. They can increase your productivity and save on the double handling and the time-consuming aspects that some people are experiencing with reports. In fact, many of you indicated that was one of your issues. So I'm going to now switch into my software. I've got MYOB loaded. You may find your screen changes colour a little bit as your screens catch up with my screen switching. So I'm now going to jump into MYOB. You should now see MYOB's latest version up on your screen. So MYOB has a number of different products in its range. In fact, in its small business range, you may have heard of Account Right, either Basics, Standard or Plus. So today's presentation is on Plus, and we're using version 2013.4, which is the latest version of MYOB on the PC platform. And just a reminder, the product that I'm showing you can be desktop, or you can have it live, meaning hosted or in the cloud, as they say. At the moment, I'm running mine on the desktop, which you can notice down the bottom right-hand corner. I don't know if you can see that, but I've got a little purple bar indicating that I'm running the software on my desktop. It's very easy to maintain your product as a hosted option or in the cloud, and that box can be changed to move you online, and if you're online it'll show as green. But the product looks exactly the same, but the benefit of it in particular is that apart from not having to relearn any features by being in the cloud, it's the same option, but also means that being online gives your accountant or your auditor or other users of the software easy access if they need to, say, run some financial reports. For those that are concerned about their data being online or in the cloud, the great feature about MYOB is that you can actually have a combination of online or desktop. So you may decide that you want to keep your data mostly on your computer or your desktop, and then once a quarter or once a month when your financial reports are being run and you need to give somebody else access, or maybe just once a year when the auditor is looking at your data, you don't have to send any data files anywhere, backup or zip files, email them, somebody has to restore them. The benefit is that your accountant or auditor can simply log in with a secure login, of course, with their role. They'll be given a defined role, so you can set up different user access for each of those users, and that'll give them access, if you move the file online, for them to get access to the data file with all the problems or challenges, I guess, for some, of backing up and restoring data. Okay, so let's have a look now at our MYOB file and see how we can produce some great financial reports. Of course, it starts with good processing, so you may be using a sales area where you're entering invoices and receiving your payments. You may well be using the purchases area where you can enter your bills so you know what your upcoming commitments are. Purchases can be an underutilised area because in order to save on, people perceive saving on data entry time, but if you put your purchases in, you'll know what your upcoming commitments are rather than just recording your transactions when you pay them. And of course, we can make use of great tools like electronic payments, connecting with our bank and sending off remittance advices. Again, as part of good bookkeeping practices we talked about earlier on, we can make use of reconciling our accounts features to make sure that our bank account balances on the bank software in conjunction with our MYOB transactions. Did you know that MYOB can actually automate some of your bank reconciliation processes? depending on what version you're on, and sometimes we find in order to cut costs, people are not necessarily using the latest version of their software. If you upgrade or maintain your MYOB software, you get some great benefits that can save you time and increase your productivity. And there's one tool here called Bank Feeds that is available at no extra cost as part of your subscription to MYOB. What this does is allows you to bring in your bank statement lines from the bank, so the actual bank transactions, and have them match up using various rules to save on data entry. Rules can define how those transactions come across and pre-populate them and allocate them to transactions within your actual MYOB file. So you simply approve those transactions, and what then that does is automates and speeds up your bank reconciliation within MYOB. You still need to click on the final button of reconciling, but it will have pre-ticked those transactions. In fact, research was done not so long ago to show that utilising bank feeds saved organisations an average of 10 hours per month. And for many that was valued at over $700. And we're all about saving time, so do consider using the latest version, because the latest technology will obviously give you some of these great features that can not only give you great reports but can save you time, which can be best used for the commitment of the purpose of the organisation. But let's actually have a look at some of these financial reports now. So reports can be accessed from a number of different areas up the top and also down the bottom of the screen. Let's have a look at, assuming that we've got our data entry all in order in MYOB. Down the left-hand panel, we've got over 100 reports that are available, which can be a little bit overwhelming sometimes, can't it? The key reports that we talked about before, if we look down in our accounts groups of reports, two of the key reports we talked about are our profit and loss and our balance sheet reports. And there are a number of different reports in here that we can use that are provided for us that we don't need to do any further customization of. They're already pre-written for us. Our profit and loss report with last year is a nice handy one, because we can compare it to our trading for a particular period of time, let's say this last quarter, to same time last year, to look at different trends to help us with making decisions for the future and also help us with projecting budgets. And in MYOB, all our reports can be displayed or sent to Excel should we need to send the data out to Excel. So let's display this first report. So profit and loss report, sometimes referred to as our income or expenditure report. A nice concise report that shows us at a glance what our income is from all our different income sources for this year and for last year. Let me go back to our list of reports. Let me look at year-to-date. It's probably the one that's, if we want to have another report to look at. If we look at how we're going for this particular quarter, October to December, let's display with year-to-date. So there's a number of different reports that come with MYOB that allow us to then further tailor how we present them. So, nice looking report. It could actually be, depending on how long your accounts list is, with all your different income and expense groups. This one's quite short, but yours actually could be quite detailed depending on the extent of the organisation. And sometimes, like we talked about before, there can be too much information. So these reports, if you notice in our accounts, can be reproduced at different levels. So in MYOB, for example, and often with other accounting systems as well, you can produce your reports at different levels. So in MYOB we have 4 different levels. We can have groups of our merchandise sales, our program income and our non-project income. But if your list of accounts is too detailed for the board that you're presenting to, it can be too much information. So it's great internally where people want lots of detail, But when we want more summarised information, sometimes we end up taking the reports to Excel and consolidating them. Up the top here in our report levels, we can, if we set up our accounts using the levels, we can make use of the report level option. So I'm now going to refresh this report and run it at level 2. So instead of getting a potentially 2 or 3 page report, I now have totals showing my merchandise sales, my program income and non-project income. Scrolling down, as my screen refreshes, I can also see my 3 or 4 core groups of admin expenses, operating expenses, maybe program expenses and employment expenses. So this may be a way that you can not only cater for your group of internal reporting detailed requirements, but also making use of the levels for reporting at a more summarised level, level 2, for, say, your board who doesn't need potentially that amount of detail. Let's close out of that report. Oh, sorry, before we go, I'll just show you in the Insert Modify menu, you've also got some really handy features to make your reports look really great. So if you want to jazz them up a little bit and put your logo on there, you can insert a picture, you can put some comments on it, and you can use some great features like row shading, so that, and you may not be able to see it so well on my screen, but you can actually make it easier for people to read because it does alternate row shading. Not bad. You might even want to use some watermarks as well if it's not quite complete as well. So there's some great features, and I encourage you to think about, if you're not already using the latest version, these features are great enhancements in version 2013. So too, with our other reports, we've also got our balance sheet, and again we've got comparative periods that we can run. So balance sheet, comparative for the same month, again taking them out to Excel, and we can again display those reports. So as I mentioned, there's over 100 reports in MYOB. It can almost be too much information. And again, these reports can be run at all these different levels to cater for these different groups. So let's go back to our list of reports. The other key reports we talked about for good bookkeeping are all in here as well. The banking reports for your bank reconciliations as well, reprint your bank reconciliation reports. So too are sales reports, your receivables reports to show who owes you money, and your purchases reports are all here to show you your payables as well. Lots of information, lots of information. But sometimes what we find is that in presenting our reports to our board, we end up running, particularly in the profit and loss area, we end up running multiple reports and try to consolidate it all onto the one screen. So we often end up taking our data out to Excel and merging reports. Is that something that you do? Are you spending a lot of time, or is that how you're spending your time, double handling it, by taking the information out to Excel? Because sometimes you want information that is produced on the year-to-date report, but you also want information from another period of time as well. Plus you also want the budget component on there too, so you really just want one concise report, as we said, not overwhelming the board with lots of information. So this is where our second tool can come into play. So the second tool we're going to talk about now is Calxa. I'm just going to switch screens again, so bear with me while I jump into Calxa. So Calxa is a tool that works with MYOB. It doesn't replace MYOB. It's designed to work with your accounting system as your cash flow and budgeting tool. So MYOB will continue to be where you process your transactions, your sales, your purchases, your bank reconciliations, and you can still run key reports in there. But if you want to take them to the next level and do those great budgeting and cash flow reports for the board, then Calxa is the tool that can really take it to the next level. And they work together. So under the Organisational Management tab, if you can see my screen here, it links to your MYOB data file. It links to the actual company file on a location on your computer. So It refreshes when you come into this screen. And what it allows you to do is set up your budgets and your cash flows. So if I go into my edit screen, I can see in here, for my organisation, the capability to set up budgets for multiple future years. And it actually works on, if I go in to set up a budget for this year, if I open up my budget, it actually works on my structure from within my MYOB accounting file. So I can see in here all my different income and all my different expense groups, and I can budget and do cash flow at my profit and loss and balance sheet level. So whilst you can do budgets in MYOB, the budgeting capabilities in Calxa are stronger. You can put in a total budget and the figures will be divided across the multiple months evenly. You can modify those figures and it will retotal your budget for the year. You've also got a shortcuts feature as well that will allow you to base your budgets on a particular year. So instead of starting with that blank piece of paper, why not start your budgets off, potentially depending on your organisational structure and your model, you may want to base your budgets on a previous financial year. So instead of making up some numbers, you've got a starting point to work on. Or you may want to base those budgets on a previous year, but base it on a percentage increase because of increasing costs. So in here is where you set your budgets for all your income and expense accounts, put in your audit fees, and so on and so on. So this is where you set your budgets. Budgets can be set both at the organisational level and also at the divisional level as well, using jobs in MYOB. Ultimately, what we want to look at, though, is the reports that come out. So in addition to all the reports you have in MYOB, you also have these expanded reports in Calxa. There's one in here I particularly love, the budget summary report. In the middle is all your different selections of the period of time that you're doing your reporting up to. And there's different formats in the panel over on the right-hand side where you can see different options of how you run the budget summary report. So let's have a look at the budget summary unspent. I'm going to run this report. Oops. So can you see on here I have my month of my income and my budgets for that same month and the variance. So that's one section of my report. I can see for that year to date. So if I'm doing reporting for the July to September period, I can see the year to date actuals and I can see my budgeted figures. You see the budgets I just put in at that point earlier on. Plus I can also see my budget annual total. I can also see my unspent figure. A great concise report where there's a great amount of information here, all in a nice concise format. And I can produce this report at the detailed level, or if I go back to my criteria, I can also produce that report at that same summarised level that we talked about in MYOB. So you can see it works with MYOB, having your chart of accounts foundations well set, and produce a nice, concise report. So what do you think? Tell me what you think. Is that going to be quicker than spending hours producing those reports at the moment? One more report to show you in here. I won't spend hours showing you reports. There's lots of great ones that you can have a look at. Cash flow. Not just about budgets, it's looking about the future of how our cash is moving. This is my second favourite report. I can see my bank balance for the upcoming period. I can see what's potentially happening in conjunction with what I've budgeted. And at the end of the period, I can easily see any issues that might arise with my bank balance throughout the year. So if it goes into red, I can see at a glance the trends at where I might, or the months where I might be having some issues. Okay, so let's jump back into our PowerPoint presentation. So that combination of reports using Calxa and MYOB can potentially save a lot of time. We've had a client who was spending a day creating reports, and we introduced that combination of MYOB working with Calxa, refined their chart of accounts. They now spend an hour producing the reports instead of one day. What could you better do with your time if you found nearly a day of time? And the great thing is that if you are currently already using an accounting system such as MYOB, you can take your reports to the next level and increase your productivity. And that's using a combination of MYOB and Calxa. So the great offer that has come out recently is that MYOB has partnered with Connecting Up to discount MYOB accounting software for the not-for-profit sector. So instead of paying full price, up until recently there has been an offer which actually expired last week. So the timing of our webinar wasn't particularly good. So I actually went back to MYOB and had a chat with them and asked them could we extend the offer, particularly for those of you who have attended the presentation today. So you will notice that the offer that's on the website, I believe it's currently showing at a 15% discount, certainly in Australia. But just stay online for a moment and I'll explain to you how you can retain the offer of 25% discount on the subscription price of one of the MYOB products. Calxa is also kindly part of the Connecting Up family, and they are part of the donation program as part of Connecting Up. So a great combination, your products together. So I know there's people with lots of different combinations on our presentation today. So rather than overwhelm you with lots of different pricing options, I will assist you with working out which is the best combination for you. As I mentioned, the offer of the discount of 25% off the MYOB software is no longer available via the Connecting Up website. It has actually been reduced, the value. So you will need to email me direct, and I've got a slide up there showing you my actual personal contact details. And so if you send me your details, I can assist you by ensuring you do get that offer, because we've asked MYOB very nicely and they've been very kind in extending that offer until tomorrow for those of you who have not previously taken up the offer. I'm also happy to assist you should you be using an older version of MYOB and you're looking to upgrade. Also to assist you with the connection of MYOB and Calxa together. It's a great way of increasing your productivity and saving on some costs as well. So that great offer with MYOB, the 25%, plus the combination of the donated copy of Calxa, we will make sure the two connect, because often you can get software but you're not actually making use of it. So send me your details with what you're currently using and what your challenges are, and I can come back to you and explain to you whether you need to upgrade, whether you can, and also about taking up the offer. Also, to thank you for the presentation today, AMC are offering a 2-for-1 offer with our webinars. AMC is a training company based in ACT but delivering our educational services throughout Australia via webinars. We've been a training organisation for over 20 years, specialising in helping organisations increase their productivity. So we have various webinars that we also deliver on products such as MYOB. My website address is up there for you to see. So contact myself or Susan here in the office who can assist you more easily. as well as being able to provide you with subscription models as well with our webinars. So I think we're getting close to time. I'm just wondering whether we've got any questions. I know it was very quick what we went through, but maybe I'll leave that screen up for you to be able to send emails to me to let me know what your challenges are. But I guess, are there any questions? And I know we've got time, but if there's any questions, I'm happy to take them on board later should we need to.
Yes, Pam, we have a lot of questions, but before we jump into questions, Christine would like to talk more about the offer to everybody.
Yeah, just to clarify, I understand we have the New Zealand audience here as well. So for those of you who are based in New Zealand, the 25% discount for MYOB, you can still get it through TechSoup New Zealand until the end of December.
So I'm not sure that we've got Christine on board. I know she's wanting to reinforce that the offers are available through
Muted.
Yeah. And we're here to assist you with the MYOB offer, and the Calxa offer is available via the donated program.
Unmuted.
Connecting up.
Yeah, can you hear me now? Yeah. Yeah, sorry. Yeah, as I said, we do understand that we have New Zealand audience here as well. So just to clarify, in addition to what Pam has informed you, for those of you who are based in New Zealand, the 25% discount for MYOB, you can still get it through TechSoup New Zealand until the end of December. So that still goes on for normal, and the special offer that Pam mentioned for MYOB in Australia is extended till tomorrow only if you email her directly. After tomorrow, like if you do want to access it, the 15% discount is still available through Connecting Up after that. So yeah, you can just get the extra 10% if you do it up to tomorrow. So that's just to, hopefully that clarifies. And for Calxa, it is still available both through TechSoup New Zealand and through Connecting Up regularly. And as Pam mentioned, she's also happy to provide some help or further questions if you need to. I'll now hand you over to Sakina to just talk about some of the questions that came through.
Sure.
Okay, so one of the questions was, does Calxa work with Apple Mac?
Does it work on the Mac platform? Not that I'm aware of. I think it's only PC based, but I can certainly check for you. But at this stage I believe it's PC. They are talking about having an online solution, so I guess watch this space. But let me know if you're interested and I can certainly keep you informed.
Okay, with different divisions, some of the costs need to be split between cost centers. So the bank fees may not be the time-saving way to go, as we still have to split. Is this right?
So bank feeds can certainly help with processing, and if you make use of the rules, so it depends a little bit on how you're processing, but the rules can help to automate some of those processes. So depending on how you're doing your splitting, I would look at how those rules are set up, because the rules can actually speed up and do the allocation between the different jobs.
Okay, some of our board members are not from financial background, so there's a bit difficulty in applying depreciation expenses, accruals, prepayments, etc. Need to submit monthly report based on MYOB figures, but still need to create spreadsheet to accommodate their needs by excluding depreciation from the figures. Is there any better solution?
Yes, certainly in Calxa you've got a feature called account trees that allows you to extract reports and take out or exclude certain accounts from your chart of accounts in those reports. So I understand what you're saying in that sometimes you don't need to show, let's say you're not showing depreciation for whatever reason. Obviously you want to maintain the integrity of your financial reports, but if you need to keep them certain accounts out, then there's a great feature in Calxa that will allow you to do that. So do we have any more questions?